Good afternoon and welcome to the Spreadex market report for the 25th of May. Messages were mixed this week as the will they won't they Greek exit saga continued. Initially, former Prime Minister Papademos stated that preparations for a Greek exit were being considered and that the risk was real. However, the day after this, he remarked that there were actually no preparations in place for an exit. Consistency is everything. As the stricken country strives to form a new government, the radical far-left Syriza party appears to have stepped into the driving seat, with a public opinion poll showing they are outpacing the rival conservative New Democracy Party. According to the poll, Syriza, which opposes austerity measures, would take 30% of the votes if the election was held now. If the trapdoor does open, then the main question will centre on how many other countries get sucked into the vortex. Spain revealed a worse than expected deficit, with the IIF remarking that bank losses could reach €260 billion. Bankia, the country's fourth largest bank, saw shares suspended Friday, with the troubled lender reported to be preparing to ask the Spanish government for a €15 billion bailout. The problem has got so out of hand that Spain have even requested their entry in the Eurovision Song Contest does not win, as they would be unable to afford to host the event. Germany, portrayed as the oasis in the desert, even felt the heat, with the poor manufacturing and services data causing a sell-off in equities. The IFO business climate also missed expectations, but GDP Q-on-Q was in line, with a Q1 expansion of 0.5%. However, this did not stop the euro from hitting a 22-month low as it pushed below the 1.26 mark against the dollar. Double-dip recession is on the tip of the tongue in the UK, as Q-on-Q revised GDP showed contraction of 0.3%, slightly worse than forecast. The IMF's review cited that the BOE should cut rates and introduce further quantitative easing. Despite this, the MPC voted 9-0 in favour of keeping the rate at 0.5%, with only Miles voting in favour of further increase of quantitative easing. Now in equities, news focused on the farce of Facebook. The Nasdaq has been hit with claims of over $100 million over the botched IPO, while shareholders are bringing the lawsuit after what is now being called a disastrous IPO. The suit accuses Zuckerberg, Facebook and several banks, led mainly by Morgan Stanley, of hiding the company's weakened growth forecasts ahead of its $16 billion initial public offering. In the UK, M&S released pre-tax profits of $658 million, whilst Vodafone reported group revenue up 1.2%. ASOS, the online retailer, saw group revenue up 46%, a further worrying sign for the high street retailers. Burberry estimates for the year are adjusted pre-tax profit up 26%. And finally, in the ever unravelling saga, the JP Morgan revealed that their CDS trading loss could exceed a staggering $7 billion as they unwind it, and thus they have suspended the share buyback scheme. Now, looking at next week, we see that in America, Monday is Memorial Day, so the US markets are shut. We have key days to look out for in the US for consumer confidence on Tuesday. We also have ADP employment data on Wednesday, ahead of the all-important non-farm figure on Friday. Good afternoon.